Okay, guys, so tonight what we're going to do is we're going to start with the 10 real estate math problems you're going to see on your exam. These are the formulas and types of problems you'll see. The numbers obviously are not the exact ones, but these are the formulas and calculating that you're going to need to figure out. And what we're going to do is we're going to go question by question, and we're going to go ahead and go line by line and answer them for you, okay? So let's start that. Okay, so the first question is a rent calculation. Right here, you see rent calculation. So a lease calls for an annual premium rent of $18,500 plus 4% of annual gross sales, in excess of $350,000. What is the annual rent for the year if the gross annual sales are $550,000? So is it 18.5, 22.5, 21.5, or 26.5? So let's take the calculation. What do you have to do? So step one, you got to figure out what the gross was, right? So 550,000 gross sales minus 350,000 leaves you a 200,000 subject to the 4% addition, right? Anything over 350. So step two, you take the 200,000 times the 4%, and that'll be an $8,000 additional rent. Step three, you have the 18.5 base rent plus the $8,000 additional rent. So your total would be $26,500 total rent. So the correct answer on that question would have been D, 26.5. Does anybody have any questions on that? This was the question. Pretty straightforward, right? Good? Everybody's good? Okay, let's go to the second one. This would be a closing cost calculation problem. Okay, a buyer has made an earnest money deposit of $10,150 on a house selling for $99,500. A local savings association has agreed to lend 85% of the selling price at 4.5% interest rate for 30 years. If the buyer closing costs amount to $1,575, how much additional cash must that buyer bring to closing? A, $6,375, B, $7,175, C, $13,889, or D, $14,175. Okay, so one thing you want to know, a lot of questions like this will have information in them that's not relevant, but it's to trick you. It's to make you throw you off if you don't know what you know. See, the test is designed for you to know the information. So right away, if you know what you're looking at here, you can throw information out, okay? So on this problem, right off the bat, the 4.5% interest rate and 30 years has no bearing on anything here. But if you don't know 100% what you're doing, it will throw you off, right? So let's look at the steps, okay? So the first thing you need to know is you need to figure out how much the loan amount is, and then that will determine what the down payment is. Okay, so you got to take your loan amount of $99,500, or your sale price, I'm sorry, your sale price of $99,500 times the 85% loan to value that the lender's giving them. And that gives you a loan amount of $84,575. So the difference of that, the buyer's going to have to bring, right? That would be the down payment. So step two would be $99,500 sale price minus $84,575. And that leaves you a down payment of $14,925. But that's not the answer, right? That's just what your down payment is. Don't get confused. Now, there were also closing costs involved that have to be added in. So you have the $14,925 down payment. That's the difference from the loan to the sale price. And then the $1,575 closing cost that was in the problem. And that gives you a total of $16,500. So $16,500 is the total due from the buyer. However, you can't forget the deposit, right? Because the earnest money deposit was given to the title company or escrow account. So now the $16,500 that's due from the buyer, you have to subtract out the $10,150 deposit because that's being credited from the escrow. So the amount over that the buyer needs to bring is $6,350 cash at closing. So final answer is A, $6,350 cash at closing. Do you guys have any questions on that one? Nobody? Everybody's good? Yeah, good. Okay, calculation number 3. Okay, this is a debt ratio calculation. Okay, a prospective borrower has an estimated monthly housing expense of $486 and his monthly obligation total $783. If the borrower's monthly gross income is $1,950, what is the total obligation ratio? Again, problems have what you don't need in them, right? So do you guys remember there were two ratios? Do you remember what they are for the debt ratio calculation?
I could be wrong, but I'm just going to go off of memory here. Is it made divided by paid, or is that a
Nope.
different one?
That's a different one. Yep, that's a different one. We'll get to that.
That's
Or in her.
her and the tour, right?
Made divided by paid is the percentage of profit. Loss divided by cost is the percentage of loss on an investment. Yep, we'll get to that one. Go ahead. What was it, Christine?
The her and the tour.
Right, the housing expense ratio and the total obligation ratio, right? The her and the tour. What are they asking you for here?
The total obligations ratio.
Right, so which one doesn't matter?
The housing expense.
Right, the 486. What you have to understand, the tour is the her plus their other long-term obligations, right? So this number here is that 486 is part of this. So if they have credit cards, student loans, car payments, that's this, right? So if they're asking you what the housing expense ratio is, it'd be this one. If they're asking what the tour is, it's this one. So you can cross this one off right away, right? So simply, it's a very simple calculation. Step 1, you take the total obligation ratio, which is 783, and you divide it by 1950, monthly gross income. And that is a 40% total obligations ratio. So the answer is A, 40% total obligation ratio. You simply take the amount of income and divide it by the obligation, by the gross income, right? The amount of the expenses by the income, right?
So for this one, basically, like, you just have to really pay attention to what they're asking for, because
Question is what they're asking. Yeah.
so do you think there'd be a question where they would ask for both, or is it usually one or the other?
No, it'll be one or the other.
Okay.
Yep, it'll be one or the other. Yep.
And if they were asking for the housing expense ratio,
Mhm.
you would take the 486 divided by 1950.
Correct. Yep. And that's it. Okay, so let's go to the next one. Good. Any other questions on that? All right, perfect. Okay, now the next one, percentage of profit. This is what Alicia was just talking about, right? If it's percentage of if it's a percentage of loss, it's loss divided by cost, right? If it's percentage of profit, it's made divided by paid, right? So a developer purchased two 135 front foot lots for $25,900 net each, and divided them into 3 lots of equal front footage. The developer sold the lots for $230 per front foot. You got to calculate the developer's percentage of profit and round it to the nearest whole percentage. Okay. So again, there's information in here that is not necessary, right? They try to throw you off. The fact that the developer divided them into 3 lots of equal front footage matters nothing, because he's selling them for one price per front foot, right? So this whole section about the developer dividing them into 3 is just the fact that is in there. Doesn't matter, right? Okay, so the answers could be 18%, 28%, 20%, or 40%. So let's go line by line. So the first thing you need to do is you need to figure out what the developer made, and you got to divide it by what he paid or she paid, and that'll give you the percentage. So he bought 2 front lots for $25,900 each. So he paid $51,800 for the property. he took the 135 front feet and multiplied it by 2 lots, right? Because that's what he had. He bought 2 lots for 135 feet, which is 270 front feet. Now, the fact he divided them into 3, 4, whatever he did doesn't matter, right? Now, what do you have to do? You must take the 230 times the 270 feet, right? Because he sold it for 230 per foot, right? And that equals 62.1 for the sale price. So remember the calculation: amount made on the sale is divided by the amount paid on the sale, and that equals the percent of profit. Okay, so you take the 62.1, the sale price, you take the 51.8, the paid price, and he made $10,300. So you take $10,300 divided by what he paid, 51.8. Okay, and it was 0.1988% profit, which rounds up to 20%. So the final answer is C. Do you guys have any questions on that? You got it? Good. The next one would be a commission calculation. So while working for a broker, a sales associate acquired a listing for $309,000 at 6% commission rate. A second sales associate who works for another brokerage office found the buyer for the property. The listing and selling brokers agreed to a 50-50 split between the offices. The property sold for $290,000. The selling broker kept 45% of the commission received by the selling office. How much did the selling office's sales associate receive? So the first thing you do is you're going to look, what doesn't matter here? Does anybody know what doesn't matter here in this question? Because there's 2 pieces of information in that one doesn't and one does.
The $309,000 doesn't matter because it actually sold for $290,000.
Right, that's what it was listed for, right? Listing price
Yeah.
don't matter. Commission's based off the sale price. So right away, you know the 309 at 6% doesn't matter, right? The 309, the 6% matters, but the 309 doesn't, right? And then what else in here is very important? So when you're doing your calculation, you know.
You need, well, once you figure out the commission on the $290,000, so it would be $290,000 times
Yeah.
the 6%.
Yeah.
You have to take that commission rate and split it in half because both the listing and selling brokers agreed to split it 50-50.
Yep.
Then you would need to figure out if the selling broker kept 45, the
Right.
remaining percentage goes to.
Right. So what are they asking for though? Are they asking what the seller broker got, or are they asking what the sales associate got?
They're asking what the sales associate got. So
that's key,
100
right?
minus 45. What was that? 55.
Yep. So there you go. That's the key. The key is what are they asking? If they're asking what the broker got, it'd be the 45 part of it. If they're asking what the sales associate got, it's the whatever's the balance is, the 55. So let's go through the problem now. Okay. So step 1, you got to take the $290,000 sale price times the percentage rate, which would be a $17,400 total commission. The 17.4 was divided by selling office and listing office, right? $8,700 each. Okay, step 3, because the selling commission was $8,700 and the brokerage kept 45%. So you need to know what 55% of that is because they're asking about the sales associate commission, not the brokerage, right? So $47.85 would be the selling associates. That's 55% of the $8,700. So the final answer is C, $47.85. That's the selling associates commission. Okay. C. You guys clear on that one? Good. Now let's look at a prorations calculation. Okay. The closing date is July 14th. The buyer is assuming the seller's mortgage loan that has a principal balance of $190,000 at 4% interest. The day of the closing is charged to the buyer. What is the proration and how is it entered on the closing disclosure? Is it 270.69 debit seller, 270.69 credit buyer? Is it 302.25 debit seller only? Is it 302.25 debit buyer and 302.25 credit seller? Is it D, 270.69 debit buyer? Well, right off the bat, what can you do here?
Well, you taught us this the other day, that when it's an assuming seller's mortgage, that it is a debit to the seller, credit to the buyer. So if you look at the answers, the only one that, and the numbers have to be the same. So
Yeah.
you could eliminate B and D because there's not a debit and a credit.
Yeah.
So
what-
now you would just need to figure
And
out
what-
if
Well, what about C?
279 or the,
What
Yeah.
is C though? Look at C.
oh, the C is.
You eliminate
it's a
all.
debit to the buyer.
Right, it's backwards, right? So
multiple
by process of elimination, sometimes you can answer the question without even doing a math problem. Because if the answers can't be what it is, this one is automatically, has to be A, right?
Right.
But let's go through it and just make sure, right? So you want to look at this and say, okay, well, what's important? What do we need, right? Now, you remember on an assumed mortgage, right? And on a purchase money mortgage, where it's lenders, the seller's the lender. And also, you know, in these situations, it's going to be a debit to the seller and a credit to the buyer, right? So what we have here, it would have to be A just because of what it looks like. And you may see questions like that where, oh my God, it's right there. But you still want to do the calculation just to make sure, but just think the question, look at the answers. You know, the best thing you could do is read the question, look at the answers, eliminate the ones it can't be, and then read it again in case you made a mistake, right? Read it again and then go. That's the best way to take the exam. So let's look. Step one, you take $190,000 mortgage times 4%, because you got to find out what the annual interest is, right? Okay, so your annual interest is going to be,
We're not seeing the process.
what's that?
We're not seeing the process.
What do you mean you're not seeing the process?
I mean the step by step. You have it in the
Yeah,
previous
it's
slide.
on the screen right now. You see it?
Now it is.
Yeah. Do you see it?
Yep. Thank you.
Okay. So step one, you have $190,000 mortgage loan times 4%, because you got to find out what the annual interest is, and that is 7,604 cents. Right? That's your annual interest on the loan. Now you have to find out the daily interest rate, right? Because you need to know how many days has to be credited and debited. So you take 7,604 cents divided by 365. Okay, and that gives you $20.82197. Okay, you want to use the whole number. You take $20. Now you got to figure out the days, remember? So you got to remember the days. Now the days here are going to be the buyer's day is going to be the day of closing, right? The buyer's buying it. The day of closing belongs to them. So you have to figure out from the first day of the month to the 13th of the month, right? So that's 13 days. So you have $20.82197 times 13 days. And that's a $270.69 is what it comes out to. That means it's a debit to the seller because the seller has to give that money to the buyer. Why? Because the interest isn't paid until the following month, right? Because when you live, the mortgage is paid in arrears. So the 13 days that the seller had it before the buyer took over, they must give that money at closing to the buyer so they can pay the next mortgage payment, which includes that 13 days, right? That's the philosophy behind it. So it's $270.69 debit to the seller, credit to the buyer. Okay. So the final answer is A. And that situation worked. It's got to be A, right? You'll see that sometimes. Okay. Any questions on that? Good. So you are appraising. Now, this one here is the reproduction cost calculation for reproduction of a property. You are appraising a 4-year-old single family residence. The main dwelling is 60 feet by 45 feet. The garage is 24 feet by 19 feet. According to the figures obtained from a cost estimating service, the base construction cost per square foot of the main dwelling is $110, and it is $95 per square foot for the garage. you got to calculate the reproduction cost of the new structure. Okay. So your answer could be 275.4, 287, 196, 340, 320, or 321, 912. Okay, so let's look at the calculation here. What's the first thing we got to figure out? We got to figure out the square footage of each area. So you have to take the 60 feet by the 45 feet, and that'll give you the 2,700 square feet for the main dwelling. Then you got to take the 24 feet by the 19 feet, and that gives you 456 square feet for the garage area. Now you have to figure out what it would cost each area to be reproduction. So you take the 2,700 square feet times $110 for the living area, which is $297, and 456 square feet times $95 for the garage area, which is $43,320. Step 4 is you got to take those and add them together. So 297 and 43,320 equals 340,320. Reproduction cost new. Okay. And your final answer is C, 340,320. Pretty straightforward, simple. Any questions on that one? Okay.
Can I see the answer again? Oh, thank you.
Sure. The answer is 340,320. See.
Thank you.
Yep. All right. The next one is a special assessment calculation. Okay. The city is repaving the streets in a neighborhood and will assume 35% of the expense. It has approved a bid to pave the streets at a cost of $52 per front foot. How much is the special assessment for a lot that measures 115 feet by 120 feet? Okay, so again, first thing you do is look at the question. Is there anything in there that does not matter?
The 120 feet.
Right, because they only go by the front feet, right? And that's always the first one. So the 120, the depth doesn't matter. It's only the front of the property, right? It's being paved. Okay, so let's look at the calculations. Well, you have an answer of 1943.50, 1638, 3887, or 3276. Okay. So let's look at step 1. The first thing you need to do is figure out how much the total cost is. So you have $52 per foot times 115 feet. It's $59.80 is for the total cost of the job. Now, how much was the city paying for?
35%.
Right. So how much would the homeowners be liable for?
5%.
So now you take the $59.80 and multiply it by the 65% that the homeowners use. That's their portion, $38.87. Now don't stop there, because remember, that answer is right there. That's the total cost of it. However, there's two sides of the street, and those homeowners split it. So you have to divide it by 2. Okay, so you take the 38.87 divided by 2, it gives you 1943.50. Don't forget that last step. The final answer is A, 1943.50.
In a case like this, Phil, is it always going to be two sides of the street? Does it say that?
For testing purposes and for the
Yes.
calculations, yes. In
And
real
then that
life,
second number, like the by whatever that number is, feet, doesn't matter in an equation, like for a special assessment
Nope.
calculation. Okay.
not for this. Nope.
So the 3 pieces of information would be the front by foot, the 52 per foot, and then the 35% expense that they're covering.
Yep, they're the 3 pieces you need for this. And don't forget to divide it by 2 at the end. Okay, now let's look at a depreciation calculation. A professional office center is purchased for $475. The land value is 30% of the total acquisition cost. What is the annual IRS depreciation deduction? Round the answer to the nearest dollar. So is it 8526, 10,215, 12,179, or 1418? What's the first thing you should look at here in this question that matters? What's not depreciated?
The land value, because land does not depreciate.
Correct. And how much is the depreciation?
30%.
Or I'm sorry, the land value, not depreciation. How much is the land value? 30%, right? Okay, so let's look at the problem. The first thing you have to do is figure out how much is the depreciable basis. So the 475 times 70%, right? Because 30% is not depreciable. So you take 475 times 70%. So the depreciable basis is going to be 332.5. Then you got to take 332.5 and divide it by 39 years. Why? Do you guys remember?
Isn't that the useful use or something?
Yep, but there's also another number. Remember, there's a number for
It's
residential.
Residential,
There's a number
and is
for
it
industrial.
24.5 or something like that?
27.5.
27.
And you got to know both of those because the question you may see may be a residential property and it may be a industrial or agriculture property. And it doesn't matter if it's 1 to 4 units or 100 units, residential. Residential is residential in this. Okay, if it's living units, dwelling units. So it's residential, you divide it by 27.5. This one you divide by 39 because it's industrial. And that gives you $8,525.64. And it asks you to round it up. So 85.26. A is your answer. 85.26. It's a simple calculation, but you got to remember those two numbers, the 27.5 or the 39, depending.
I
on
was
the
just
piece of
gonna ask,
property.
what would the question, like if they were looking for the 27.5 for you to use that in the math equation, what would the question look like?
It would say a 100-unit residential complex, or
Okay,
an apartment complex, or
because it's for like complex buildings, condos, stuff like that.
condo. Yeah, it's something you live in.
Gotcha.
This
Okay,
here is a professional office center, so that's actually commercial.
okay.
It's
So the
not industrial.
difference is commercial and residential
Yep,
between the two numbers.
commercial and industrial.
Industrial, okay.
Yep. So it's either residential or commercial and industrial. The commercial industrial is 39 years. Residential is 27.5 years, right? Good. Okay. Any questions on that? You guys good? Okay. All right. Let's look at the property tax calculation, the fun one. Okay. A homestead property is located in Pensacola, Florida, in Escambia County. The city tax rate is 8.8 mils. The county tax rate is 9.2 mils. And the school district tax rate is 6.5 mils. The homeowner is a widower and has qualified for homestead exemption. The home has been assessed at $195. So what must the property homeowner pay in property taxes? $2,403, $2,884, or $2,844, sorry, $3,258.50, or $335.92.50. Okay, so let's look at the steps of this one. The first thing you need to do is you got to figure out the amount of the tax assessment after the exemptions. So because the home is 195, it's over 75,000. Do you guys remember what that qualifies for? County and local,
25,000.
county and local a certain amount, and school a certain amount.
Yep. School is 50,000.
Nope,
The other one's 25,000.
you got it backwards. County and local is 50, and the school is 25. School taxes are never reduced more than 25 for the homestead exemption. However, it is reduced for the widower and the other fees. But county and local is 50,000 when it's over 75,000, and the school is 25. Never more than 25. Remember the little grid I made for you guys?
Phil, and if the home value is below 75,000.
It's 25 and 25.
25.
Correct. Yep.
So I guess an easy way to remember it would be like city and tax. You said the city and county taxes are 50, so that's 2. So 20, if you kind of think of it that way.
Yeah.
And then the 1 is just 25.
The city
for
would be 25
school.
too. Yeah, the city would be, because the extra 25 is a second. The extra 25
Right.
is additional when it's over that amount.
That's just the way my brain worked when you said
Yep.
that, Daniel got it back. So I was like, well, an easy way to remember it is if you remember that the city and tax, because there's two of them, it doubles. If you
Yeah,
think of it in that
That's
equation.
that's a good way. Yeah, that's a good way. Because there's two, right? School has one is 25 always. The other one has the one that's possible 25 and 25. Right. That's a good way to look at it. So let's look at the calculation. So you have there's two calculations always, right? One for city and school, or city and county, and one for school, right? There's two calculations. So you got to figure them both out. So you have to take the 195,000 assessed value minus the 25,000 base exemption minus the $5,000 surviving spouse exemption, and that gives you 165,000 taxable value for the school taxes. Step two is you have 195,000 assessed value with the $50,000 homestead exemption, right? Because it's over to 75. And then you have the $5,000 surviving spouse exemption. So that taxable value will be $140,000 for the value of the city and county. So now we got to figure out the tax costs. So the step three is you'll start with the 165,000 taxable value, okay? And the mills were 6.5%. So you always move the decimal point 3 places. 1, 2, 3, right? Mills, right? 1, 2, 3. And that gives you school taxes of $1,072.50. Now, step 4, you have the city and the county. The city and the county, you could do separately in a math problem, but why? You can add them together and it's a simpler math problem. So you take 8.8, 9.2 and add them together. And that's going to give you 18 mills. So when you have 18 mills, you move the decimal point 3 places. 1, 2, 3. So now you take 140,000 taxable value times 0.018, and it's going to give you $2,520 for the city and county taxes. Now you have to add those together, and you have $1,072.50 school tax and $2,520 city and county tax. So your total is $3,592.50. A final answer would be D, $3,592.50. Any questions on that? The things you have to remember is what gets 25 and what gets 50, right? If it's over the 75. That's the thing you need to remember. Other than that, every deduction for widow or, legally blind, those situations, right? It's 5,000 for each one, right?
Phil, so just to reiterate, school is always a $25,000 reduction,
Correct. No matter how much the
no
value.
matter how much the assessed value is on the home.
Correct.
And then if the assessed value on the home is over 75,000, you get a total of 50,000.
Only on county and city.
Only on county and city,
School
but
stays
not on
25
school.
all the time.
And then for the $5,000, it's a widower. Is it the quadriplegic or something?
No,
What are the other exemptions?
quadriplegic is 100%.
Quadriplegia is 100%.
Okay. If you're military, 100% disabled, 100%. If you're 10 to 90%, 99% disabled, it's an extra 5,000. Right? If you're a surviving spouse of a first responder who's been disabled, the surviving spouse and the first responder, 100%, right? Surviving spouse of the military person who gets killed in the line of duty, 100%, right? So you have to just remember those. You have to remember those. That's the only way. If you're disabled, I might have misspoke. If you're disabled in the military and you're up from 10% to 99, it's 5,000, right? If you're 100% disabled, it's 100%, right? Okay. But you just have to remember those. That's just something. Now for testing purposes, they go basic. It's not going to be that tricky that I've ever seen, but just, you have to remember them because you may be questioned on that. So you gotta understand those. Okay.
So Philip, sorry, that level of detail that you mentioned is in the CRAM guide, right?
Yes. Everything is in the cram guide. Yep, absolutely. And we're gonna go over that. We're gonna be going over that.
Thank you.
So that's the 10 questions, guys. That's the 10 math questions. These formulas, this type of stuff. Okay. Now, in addition to these 10 questions, you may see some other calculations that you need to do. Maybe, the 43,560, remember those for the square mile, how many buildable lots. Remember we talked about that, with the lots being buildable. The couple of the calculations with the tracks and the meets and bounds and all that stuff in there, and the lot and block, those calculations. Remember the 640 divided by the denominators, 640 divided by 4 divided by 4 divided by 4. You'll see some of those math problems too. So from these 10 problems and those types of problems, which we'll go over them in more detail, you're going to see those. Okay, so it's these 10 problems and a possible 2 or 3 others that we've gone over. But for sure, you're going to see 10 math problems one way or another on the test. I just don't know which ones. Okay?
Sorry for the
Go ahead,
the,
Francisco.
the last one. You didn't show us the step by step.
Sure I did,
The
right?
last one, step by step.
That was this one right here.
Okay.
Right?
Thank you.
That's the one we just did with the city, the county, the mills, adding them together. Remember? You had the homestead, 8.8, and then we went through, you got to find the taxable basis on both of them. Then you have to multiply by the mills, and then you got to add them
Okay.
together, right? It's really just the only thing you need to know is it 25 or 50? And just what are the deductions? What if the question says, what if the property's not homesteaded? What would happen?
You don't get the $5,000 homestead deduction.
Right. You don't get any deduction. If it's not homestead, you don't get the 25, you don't get the 50, you get nothing. If this just said a property is located in Pensacola and it's not homesteaded, you would just take 195 by the mills and that's the taxes. Right? Homestead gives you the 25 or the 50, all the other benefits. So if it's not homesteaded, if you see a question where it doesn't say it's homesteaded, just add that up. If it's homesteaded, it's 25 for school. If it's over 75, it's 50 for county and local, right? And then you got to figure it out what the amounts are and take it by the mills and then add them together. And that's your total, right? Okay.
Phil, the other potential math problems with the acres and
Yep.
lots and blocks and all that, will you go over those with us?
Absolutely. We're going to go over those. Yeah.
Okay.
You know what? Where do I have them in here right now? Let me see if I can, let's go find them right now real quick. Let's put them in this video so we have it together. Just give me a second to find them.
Thank you.
Yeah, it's going to be in the what you call it? Let me close this out here. So let me go into the PowerPoints really quick here. And I'm trying to think which one it was. It's not going to tell me on here. Give me a second here. It's going to be the tax or the meets and bounds. It's appraisal. I forget what chapter it is. It's not that one. 17? Oh,
I can look it up here.
it's okay. Yeah, I forget what chapter it is.
Chapter 10.
Is it 10?
10 is the legal descriptions.
I don't think it's 10.
It has the parcels, government surveys.
Okay, so this one here, let's look at this one. Yep, this is where we are. So you want to remember, let's look at these here. This is when you're going over the sections, remember? And we're trying to figure out where the property is located and how many acres it is. So remember, these are the two problems. Okay, calculating the size of a lot. That's the calculation. And there's two calculations for this. So on a description, you will see that the question would be, the southwest quarter of the northeast quarter of the southeast quarter of the northwest quarter of section 12, T3S R4E. So on this question, what does it matter? The section, and all this part here does not matter, right? What you need to know is every area starts with 640, right? It starts with 640. And you divide it by the denominator. So 640, you got divided by 4, divided by 4, divided by 4, divided by 4. So that this area size of it would be 640 divided by 4 by 4 by 4 by 4 is 2.5 acres. That would be your answer. Now, if the question has an and in it, right? If the question has an and in it, here's an example. Southeast quarter of the northwest quarter and the northeast quarter of the southwest quarter of section 21 T4N R5W. What doesn't matter in here? The same thing. The section, for calculation purposes, this doesn't matter. Everything starts with 640. So 640 divided by 4 equals 40 acres. Then you got to start another calculation for the other side of the and. 640 divided by 4 is 40. And that's 80. If one of these was southwest half, a 2, it would be divided by 4 divided by 2. Whatever that, just because the denominators are 4 in these examples, it could be 2, it could be 4, right? Whatever that is, it would be here, a 4 and a 2 or a 4 and a 4, and whatever the answer would be added together. Because you may see something that's not always a 4, right? Just for these purposes, it's a 4. Okay. Any questions on that? That would be one of the types of math problems you may see. And then also, you figure out how many how much something costs per square foot, right? So let's say you have an acre of vacant lot of partial land that sold for $65,340. So how do you find out the square footage price? You got to remember there's 43,560 square feet per acre. You got to remember that. Nobody's going to tell you that. So you got to take the sale price divided by 43,560, and you got $1.50 per square foot, right? That's that. The other problem is the one, remember about the buildable lots, where you have to figure out there's so many acres, so many of those acres, 20% are for the street and roads, right? Remember that? And then you got to figure out how many available square feet, then divide it by the minimum amount of square feet per lot. Remember we did that one where the 10,000 and you got to divide it, and it was like 418.
I remember doing it, but if you could bring it up again and show us, that'd be amazing.
I don't remember. Let's go back. I don't remember where it is. Hold on. Was it 18? Hold on. No, it's not 18. We're gonna find it. Hold on. No, that's the other one. That's the calculation we did for the thing. Let's find it. I just gotta find the chapter.
I think it's gonna be 9.
9? Was it all the way back there?
I think so.
Title deed ownerships. I don't know. Hold on. No, not 9. I don't think it was that far back. Contracts is 12 or 11. Nope, not mortgages. Oh, you also want to remember the yields. Don't forget the yields will be in there. Remember the points and the yields? So the points are 1% cost each. And then to find out the yield and the yield increase, remember the 0.125, 0.125, 0.125. Remember that? You want to go over those really quick? Let's do those. Let's go over these real quick. The LTV is easy. You guys got that one. All right. So remember LTV, you just take the purchase price and the loan amount and divide it. Right? Loan amount divided by the purchase price, 90%. That's how you figure out your LTV. That's the loan to value, right? So the cost of the discount points. If you're buying a point, it's 1% per the loan amount. Remember, right? Not the sale price, the loan amount. If you buy a house for 300,000 and you're financing 260, it's 1% of the 260 per point. You got to remember that, because you get a problem, they'll tell you, you know, your loan amount was where is it here? Remember the question? You got to here. A couple purchased a home for 425. The buyer financed it with an 80% mortgage. The lender charged 3 points, right? You're buying the points. This is for the cost of the points, not the yield, the cost. So the first thing you have to do is determine the loan amount. How do you do that? Well, if the sale price was 425, the loan amount was 80% of that, right? So whatever 80% of that is, you would multiply that by the 3 points. How much would that be? How much is a point? A point is 1%. So you have 3 of them. How much? 3%, right? So here, the step 1 would be 425 purchase price times 80%. Loan amount's 340. So you would have to have 3% of 340, right? If it was 2 points, it'd be 0.02. If it was 1 point, it'd be 0.01. If it was 10 points, it'd be 0.10, right? So 340 times 3%, 0.03 is 10,200. That could be a question that you see, something like that, right? So that's a calculation problem, right? The 10 I showed you, the 3 I just showed you. Now, don't forget the yield. So on this same loan here, where those 3 points cost them 10,200, that same loan, you have to figure out the APR, the yield, right? Yield increase. So on that same loan, say, okay, on a yield, it's always 0.125 per point. It's an eighth, right? So the formula is discount points times the yield, and that'll be the increase, right? So on this loan, how many points did you buy? 3, right? 3 points. So on this loan where you paid 10,200 for the points, if each point is 0.125, how much would the yield increase be if you bought 3? So if you have 3 points you bought, and you have to increase each point by 1 point or by 0.125, what would your yield increase be? Anybody?
37.5.
Nope, 0.375. Right? So if you have 3 points, your yield increase would be 0.375. What if the rate was 4% here? Let's say it was 4%. And you had an increase of what? 0.375? What would your effective yield be? You got to take the rate plus the increase, and that's your effective yield. So if your rate was 4% and your yield increase was 0.375, what would your effective yield be? You guys are muted. Got to come off mute.
4.375.
Right. What if it was 5%? What would it be?
5.375.
Right. If it was 8%, what would it be?
8.375.
Okay. What if it was 2 points you bought? What would the increase be?
.25.
0.25, right? If it was 4 points, it'd be 0.5, right? 0.125, 0.125, 0.125, 0.125. So it's 0.125 for every point. Whatever the rate is, right? Whatever the rate is, whatever the increase is, you add to it. And that will give you your effective yield. And that will be your APR, right? So if your rate is 4%, your APR would be 4.375 in the original case, right? Does that make sense?
Yes.